So, hello, and a massive hello to everybody. Hope everybody's having a great weekend. This is 50 Pips, rocking and rolling, 19th of June 2016. No trade calls, no recommendations, or response for their own stuff. And the fact that you're listening to this means you've already understand you accept all the disclosures, disclaimers here on the website and everywhere else. Understanding that we're just performing some live technical analysis in a learning context for educational purposes only. So, happy Father's Day to everybody. So, it looks like we're having some problem. A lot of people having issues getting into the room. So, let's see what happens. I got a bunch of questions by email too. Let's see if any come up on Twitter and try and tackle those too. We'll try and do the best we can. So, what's going on going into this week? So it's going to be a very interesting week. Again, everybody's focusing on Brexit. We'll have to see what's going on there, but we do have other things too, right? So we've got monetary policy meetings out of Australia on Tuesday. We've got German ZEW, and then don't forget that the other big event risk is basically. Yellen testifying on Tuesday and Wednesday, right? So that could really be, we could really get some potential tape bombs there. We do have crude oil inventories out. And again, unemployment claims on Thursday and IFO on Friday. As far as I know, the Brexit, so basically the vote is on the 23rd, on Thursday. Um, as far as I know, the first results should start to come out, I think, around 3 or 4 a.m. London. And apparently, it looks like around 7 or 8 a.m. London. So on Friday, we should have a pretty good feel for who's clinched this, right? A lot of people asking about what I make of the polls, and again, as I really don't care at all about the polls, right? So basically, there's two things. One is that the polls have a very big effect in sparking volatility, causing volatility in the market. So you have to be aware that polls are coming out, et cetera, et cetera. So of course, you have to follow them if you're trying to trade around that. But if your question is linked to the polls vis-a-vis the actual result, I really don't understand why anybody with any kind of experience or brain power would be interested in what a poll says. The only thing, and I know some people are going to get mad at this, but the only thing I care about really is I'm trying to get a feel for the outcome, is I'm only looking at what the odds are in the bookies, right? Polls, it's good headlines, a lot of clickbait, a lot of stuff. People who rarely get stuff wrong are the bookies. So if you want to see what's going on, you look at the bookies site, whether you're looking at William Hill, you're looking at Ladbrokes, whatever. But that's what you're looking for if you want to know the best idea or the best odds of something happening. But you have to follow the polls, right? Of course. But in terms of not trading, the ultimate outcome, you're much better off looking at what the bookies are saying, right? Now, as we say, these are events that come out very rarely, right? You can call it one in a lifetime or a couple times in a lifetime events. So really, our focus would be on not wanting to be involved, right? Wanting to be involved the least possible, right? It doesn't mean that there aren't opportunities around these events, but we like to stay extremely small and extremely tactical if trading at all, okay? So, but to answer your question, really, the question on the poll, I don't think the polls have a lot of influence in short-term volatility and moves, but if you want to have a good idea of where this is really going or has been going, you want to look at what the bookies are quoting in terms of real odds, because the polls are clickbait. Real odds, there's money behind that, right? Okay, so really the focus is here going into this week also is on the ES, right? We've seen some very, very interesting action on the ES. Just a reminder, we're still stuck pretty much in our range, right? Which is 2100, 2050, and 2000, right? And we're still wheeling and dealing here. Not an awful lot has happened. And we've had some fairly interesting trading conditions, right? We talked about when we failed at this trend line, we came back down. We talked about the fact that this was a very important support, and if we caught a bid here, we would expect this to try and take a stab at the upside, right? And what's happened here, we've had two spectacular failures at high range and a move right back into mid. So extremely nice trading condition, very nice action. Now, as a reminder, we were talking about this in the weekly sessions pretty much every day, but we also talked about it in the Sunday video, right? And we talked about the fact, basically, 1 week ago, 2 weeks ago, well, now it's 2 weeks ago, 3 weeks ago, 4 weeks ago, right? What we talked about is be very cautious with these ramp ups when you're getting low volume ramp ups in the overnight sessions, etc., because these moves, you can give these back quicker than you can blink, right? And we started the base here, we broke outside, and as we were failing here, we said, watch out, because these 2 weeks moves, you do not want to be stubborn. And look at how quickly we gave this back. We gave this back, came back into trend line, previous resistance, which was acting as support, acts as resistance again, bam, we take out here. You know, classical action, very nice action. So again, going into the week, what we're focused on is not a lot has changed, right? We're stuck here at mid. So the big question is how we're going to navigate what Yellen is going to talk about, and you know how we're going to navigate towards this Brexit, right? Shrinking liquidity, a lot of people on the sidelines, a lot of chop, possible people trying to hedge positions, etc. So it could get very volatile. But again, stepping back, looking at the bigger picture, right? Here we are still stuck inside a range, 2100, 2050, 2000, and we're stuck at mid. Now, for all those people talking about and you know, it's tricky, is it dangerous, not so sure about this week, a bit worried, let me give you a very important but very simple piece of advice here. The Brexit, the implications on of the Brexit or on Yellen in the market and on your possible P&L will only have an impact if you have an open position, right? Or if you try to trade it. If you don't have any open positions, if you're flat as a pancake, you couldn't care less about low liquidity, about gaps up, gap downs, about higher margin maintenance, whatever, brokers raising margins, you couldn't care less because you've got no risk. So as always, if you're not comfortable, if you're not sure, if you don't like this kind of market, just don't trade it. Go flat into the week and look again when things stabilize. So remember, whatever happens in trading, nobody does anything to you. You do everything, we do everything, everyone does everything to themselves, okay? So that's an important piece of advice. Now, so the other thing here, there's no big change for us, right? Weekly close above 2100, bullish. We'd expect market to try and rip up, take a stab, 2130s. Weekly close below the 2050s, we'd expect move back into the 2000s. Weekly close below the 2000, we would expect the bigger correction we've been talking about to come. The bigger correction we've been talking about is a move back to the 50 back of this ramp up, and that would mean potentially all the way back down into the 1960s. So the level to watch from a weekly and from a daily close remains these 2050s, right? And you've got an awful lot of support to the downside, and you've got an awful lot of resistance to the upside. So it's still choppy trading, and you know, I wouldn't be surprised for nothing exceptional to happen or get momentum unless something exceptional happens from the Brexit or from Yellen, right? So far we're still in that range, but there have been plenty of opportunities inside that range, okay? The other thing to watch is gold. We've been talking about this range in gold, same thing, 1300, 1250, 1200. And again, you see how we broke here, guys who bought the break not sitting too pretty here, and we're kind of stuck. So unless something exceptional happens this week out of Yellen, out of Brexit, you would expect gold to continue to stay trading inside this range. Something has to happen for the ES or for gold to break out, right? If not, it'll likely be a lot of choppy trading, a lot of moves trying to take out players at the extremes, but ultimately stuff staying pretty much in range, right? Speaking of metals, something we talked about was silver, and it's interesting because if you missed it, you can go back and look at the last video. We talked about the the triple confluence of the longs on silver here at 1600, and we're ultimately expecting a move back to 19 and possibly 20s, right? But what did we say last week? We said, as good as this looks, do not underestimate the importance of these highs, right? A lot of people towards the back end of the week when we're pressing, say, oh, I'm going to miss the move, buy 17, 1750, 1760. You know, you have to respect these levels, right? So also right here, we need some kind of catalyst. If not, probably, you know, this kind of resistance will try to hold, right? Unless something happens, you know, does it change the structural view that we've got a triple confluence of our mid-range here, our channel low, our 50 back of the move off lows, all coming in here with a nice weekly positive close? Absolutely not. You know, bullish rotation in play. We expect this to continue higher, but you know, we might need to see another little retracement and then for it to continue. Remember, markets tend not to move in a straight line for a sustained period of time. Okay. Now, the other chart, which to conclude this, you know, on these futures is the crude chart, right? And crude, we've had some very nice action. Again, we were looking for potential top to form here in this shaded area, taking advantage of all these resistance zones lining up with the descending channel. It was very sloppy because we actually had a daily close outside there, and then we reversed, so very sloppy to trade. But right here we've moved back down. So what the bulls want to see is they want to see these lows to hold, and they want to see this challenge and take out those highs very, very quickly. What the bears are going to be looking for, they're going to be looking to short into mid of this channel for that continuation lower. Now we'll probably it's all a question of risk on, risk off essentially this week with Yellen and Brexit, but we're still stuck in this shaded area. Bullish above, bearish below. It's the closes that are important, but be careful. The week will likely see a lot of slow conditions. We'll see a lot of volatility probably come in on lower liquidity on Tuesday and Wednesday with Yellen, and then on Thursday, you know, things could go to a standstill until we get clarity for the Brexit, and then as we come into the day, Friday, late Asia, in the start of London, very, very early, even a couple of hours before London, when the results start to trickle out and we start to get a much better feel for who's won, right? As far as I know, they count the votes until one has the mathematical majority, and then it's pretty much done, right? The official thing might be announced later on, but you know, it could be pretty much done fairly early. So keep an eye out for that, okay? Now, one thing to watch, a lot of the action, a lot of the questions which I got is, you know, what would you look in terms of risk on, risk off? You know, of course, crude ES are interesting, but if you're looking at the Forex market, most likely you'll see the crosses move very aggressively. So you'd want to keep an eye on Euro CHF, Euro JPY, GBP JPY, right? Those are the things you'd want to keep an eye out for. But I can't stress this enough. This business is about consistency, about longevity, about showing up every day, doing more of what you do well, doing less of what you don't do that well, right? And try to improve, and slow compounding of your account, slow continual progress, and steady returns. It's not about trying to bet the farm on some kind of binary event on low liquidity chop and heightened increased margin conditions, right? Let the let the jokers do that. Let the Instagram posters have fun with that. But if you're serious about what you're trying to do, it doesn't mean that you have to stop trading, but be smart about it and trade as small as you have to make sure that whatever the outcome of your trades, they will not impact your life neither extremely positively or extremely negatively. It will just be another day in the office, right? You might, when the volatility really picks up, you widen out your targets, you widen out your stops, and you decrease your size. Just make sure you try and stay as stable as possible. You don't want those huge P&L swings. You don't have those huge moods, those huge emotional swings. You want to be as slow and steady, as consistent as possible. Okay. Now, in terms of cable, and we talked about this months ago, right? We talked about the fact that we were stuck in this sideways chop, and our major forecasts months ago, right? Since the beginning of the forecast, we said something as crazy as we expected to stay pretty much somewhere in the middle of this range as we go into the Brexit, right? So right here, really what you have to watch out for is understand that anything inside this range is a bit of a sitting duck. It's a lot of velocity of move inside range, and you really don't want to get caught out, right? Now, this could be a dud and we could do nothing. If we really start to rip to the upside, one thing I would be very careful is I would be looking at, if we trade to the upside, I'd be looking at those 148s, 148.20s, right, as a big resistance. If we start to get traction above that, let this go. But failure here could be interesting, right? On a puke lower, if we're holding somewhere inside 38 to 35s, this could be an interesting place to look if it's starting to base. If we open below there and we're getting traction below there, let it go, right? Let it go. Don't get stubborn. This is really not worth blowing your account on or getting an ulcer over, okay? Other interesting things going into the week. Again, Euro fairly classic, in line with all the charts we've been posting. I think two things to watch which are going to be interesting is Kiwi, right, which is still stuck at this big level. Let's see how it behaves. As long as we don't start getting closes back above the 7170s, we'd still expect this to come right back down into these lows, right? And the other thing which is fairly interesting is, that sell, that move on Aussie where we were traced all the way back into the 50 back. We've got the confluence of the daily close at the moving average too, right? And it's trying to get some traction. This is some very choppy zone here. So we consider this velocity of move inside range. But closes above, we'd expect these highs to get taken out. Closes below, we'd expect this to try and complete back into the zero and hit a primary target of 69.80s, okay? So I'm really sorry about what happened on this Adobe with people not being able to get in. We'll try and do another one as soon as possible. Have an awesome one as always, guys. Thank you so much for the support, for sharing, for retweeting. It's good to see that there are people out there not just going through the content but not giving any signs of life. It's good to know people are behind the content or watching it or finding it useful. So thank you so much. Have an awesome one. Take care. Bye-bye, guys.